remain professional. And I did make a request for some house music so that we can get our life, because that is actually, it's after 6 and you all are here. We need to make sure that we keep that vibe going, making sure that we keep that energy going and some enthusiasm, even though we are talking about making sure that we know how to manage our money. And that's not always fun. And, you know, Tashia had mentioned the fact that I have 30 years of banking, but I also have, more significantly, 30 years of life experiences and challenges that I've been able to make it through by his grace and keep going and surviving. So I am excited to be here. I want to give a major shout out to our CEO and president, Miss Tiffany Major. Thank you so much. Props up. And again, Tershia and Bria. Thank you all so much for your patience and my challenges. You know, as far as, I'm going to challenge as far as being technically savvy. So one thing I want to make sure, Bria, is it okay for me to go ahead and share can you all see my screen? Can you see my PowerPoint presentation?
We can see it. It's Bree.
Bree, I apologize. Bree, so I'm going to, you said you can see it. Can you see it now? Awesome, awesome, awesome. So with that being said, I am absolutely excited to talk to y'all today about some financially healthy habits you can establish to help you take control of your financial future. So this presentation is really, it's the first of a series of workshops that I facilitate. And specifically, I look at this specific presentation as more of an overview of what's to come in my other series of 7 more workshops, which not saying that's going to be rolling out with you all today or later on, but just sharing, it's a mini moment and you're going to be excited to hear. I'm going to give you some time back. So, and just a few housekeeping notes. We always got to make sure that we have dot our I's and cross our T's. Please make sure that you have your lines on mute and make sure that you all take some notes. We'll have a moment of a Q&A, so that if you have any questions or concerns, that we'll definitely be able to answer that. And if I don't have the answers, I definitely connect you with someone who will. If you see on that first slide, please make sure you take my email address, because I am definitely all about making connections to help folks on their financial journey. And again, we talked about my 30 years of banking, and I talked about the significance of being transparent. So my life has been more than an ocean. It has been more than a roller coaster ride. I know what it's like to have a credit score below 600, and I know what it's like to have a credit score above. I'm married now, but I walked in the shoes of being a single mother for a few years. So I know what it's like to go from 2 incomes to 1. So from experience, you can rise from any financial challenge if you just put the time, the focus. You got to be patient, because it's so easy to get into debt. It's so easy to get into the mess, but it's so much harder to get out. And last thing, you got to make sure that you stay disciplined. So with that being said, let's see if our slides are going to click over. Here we go. Everything's rocking and rolling. Now let's be honest. It's not always easy to know where to start on a path towards achieving your financial goals. Or maybe it's easy to start. However, the challenge is really, as I said earlier, being disciplined and making sure that you're committed. So what you see on the screen, Wells Fargo has 8 healthy financial habits, and they provide, it's just a set of easy to follow guidelines. And each habit has a simple step on how to get started on your journey to, basically be in better financial health. And you can actually find this information that I'm sharing with you on the website that's listed above in the left-hand corner, wellsfargo.com/financial-health. So what are we going to be talking about? We're going to talk about pay yourself first, creating a safety net, pay on time every time, reviewing your insurance annually, tracking your spending, pay down high interest rate debt, know where your credit stands, and saving for the future. So now let's go ahead. All right, that's working well. So let's go ahead and go just a little bit deeper into each one of them. So as we can see, we're getting started with pay yourself first. So why is this so important? Number one of the most challenging aspects of saving is making sure that you set money aside as soon as you get your paycheck and not being sidetracked by, it's a lot of financial chaos that might be going on in our lives. And in this season of life right now, it's really been hard. So the question that I want to ask you is, do Americans use pay yourself first as a financial strategy? And I actually pulled up some information from an article that I got through, I think it was, or I'm sorry, reported, I got it from Economic Well-Being of US Households, and it's from actually from the Federal Reserve. And it said the research says that saving indicates that a relatively small percent of Americans follow the phrase, pay yourself first. And in fact, again, the Federal Reserve reports that in 2019, less than 40% of Americans could not cover a $400 emergency cash item. So that's kind of heavy when you think about that. That, whether it's a car repair, which I just went through this with my daughter, who did not have, I hate to put her on blast, did not have the money to set the money aside for the deposit for the rental, because we have to make sure that we get that plan in place. But the advantage of paying yourself first out of your paycheck is that you build a nest egg to secure your future. And it creates a cushion for financial emergencies such as my daughter, car breaking down, or unexpected medical expenses. So without savings, many people report experiencing a large amount of stress. And this has been a stressful season. This whole COVID thing, on top of the economy, on top of, unfortunately, folks losing their job, stress of folks being ill. However, many people claim that they simply do not earn enough money to save, and they fear if they start saving, they may not have enough money to cover their bills. So if you deposit or move money into your savings every time you get paid, you may be less likely to spend it on your everyday expenses. And we all know your checking account is a transactional account. Everything goes through that account. But what's so critical is making sure that you separate some funds. So pay yourself first is a practice that can help you foster a habit of saving that will add up over time. And then, it'll help you to be more prepared as far as for large or any type of unexpected expenses. So the statistics that they show are percentage. A good target is 5 to 10% of your take-home pay and putting it towards your savings goal. However, my motto is something is better than nothing. So saving even $25 every pay or $50 a pay is one small step you can take. So it can help you get into a financial mindset and a habit of being able to pay yourself and having you to make savings as a priority. So let's move on to creating a safety net. So we begin to build a savings by paying ourselves so that we can get to the next level of creating a safety net. So why is a safety net so important? We're living in it right now. I mean, if there's nothing, this season that we're going through, to me, has been one of the most challenging financial situations that I've heard for some folks. And it's been a challenging time. So you want to talk about contending with challenges. It's just a hard season. And I know that this is an unprecedented season. So many of us are just living, unfortunately, from paycheck to paycheck. But if you can, you need to separate your day-to-day transactional activity and have an emergency savings fund. And the benefit of separating an account is having funds not commingle with your transactional funds so you can better monitor your spending and to cover your expenses during any unforeseen events like illness, loss of job. And I keep bringing up this car thing because I think about my child. But anyway, and having money at your fingertips may take some of the financial sting out of dealing with, unforeseen events, and might also help you to avoid any extra debt. And a good goal is to put away a 3 to 6 month worth of living expenses. And this might seem like a big amount at first, but the idea is to put a small amount away, as I share with you, each week or every 2 weeks so that you can have some type of goal. And the other bullet point states, placing your emergency savings in an interest-bearing bank account. Now, savings are not giving that much money, but you want to make sure that you're putting. Bottom line to me is making sure that you separate your funds. I'll give you a quick example of myself. I have a checking and savings account, and it's with Wells Fargo, but I also have an account that's actually, I live in Baltimore County, and it's actually in Montgomery County, and it's actually a credit union account. And I have $50 going in there every pay period. There is no debit card attached to it. And you say, well, Montgomery County, the bank is 25 minutes away from me. So if I need to go and get some money, I really have to think about it and meditate on it. Is it something that I really need? And that might seem like, really, Trace, that's kind of extreme. But if extreme is what you need, then extreme is what you should do in order to make that first step to save that money, because it's hard, y'all. And I know it. Now, this is critical. Pay on time every time. Your payment history is a big part of your credit score, and it actually represents 35% of the total of your credit score. So paying all your bills on time is one of the best and most important things you can do to protect your credit rating, and you want to make sure that you're avoiding late fees. That's also a good idea to prioritize and schedule your monthly payments, making sure you pay at least the minimum balance every month on all your accounts. So, as I said, transparency is what's key to me in my presentations. So, another quick example is I needed to consolidate my credit card debt. My husband and I, we decided that we're going to do some renovating in the house. So, number one, you need to have a goal. What is your goal? Well, I need to consolidate my debt so that we could apply for this loan. So, okay, this is not rocket science. However, staying disciplined on your financial goals, it's like losing weight. If you do not follow through, you are going to keep gaining. So, and that's the same with debt. I mean, if you do not follow through, you will keep increasing as far as your financial debt. So I told y'all we're trying to do a home improvement, yada, yada, yada. So transparency. I had Macy's card, JCPenney card, Capital One card, Discover card, Kohl's card, Neiman Marcus, yes, hot mess. And let's not forget Amazon Prime. So, but right now, and I did not let go of that Amazon Prime, I'm not even gonna lie to you. I only have 2 active credit cards because I paid all of this off. And yes, I'm telling y'all, I'm very proud of that. And the details on how to do this is actually in my budgeting and savings seminar. So if you're interested in finding out more, how I actually pulled it off, I will have to talk about that at another time. And as a tip from Wells Fargo, to take it one step further, you can set up an automatic payment and reminders online to save you time so that you can ensure your bills are paid before they're actually due. So this slide here, this is lightweight overview for something that really needs to be taken into account as a priority on your financial journey. Having insurance and reviewing your insurance annually, excuse me. So you work hard for yourself and your loved ones, depending on your significant other and kids. So protecting what you value it really doesn't have to be that hard. It's just about getting the information, knowing the resources, and implementing a plan. So to secure yourself financially and protect those that you love, there are a few steps of insurance that everyone should consider, such as homeowners or renters, auto, life, and umbrella insurance. And it's also a good idea, review your coverage once a year. And keep in mind, the insurance needs change, your insurance needs change as your life changes. So, I mean, whatever big event that might happen, I mean, maybe you're moving, you're getting married or starting a family or changing jobs. So you want to make sure that you're monitoring your insurance process. And another quick tip, comparison shopping can be extremely beneficial. Reach out to your insurance company so that you can evaluate what your current plan is. Because keep in mind, once that agent has gotten your information or you've gotten that insurance policy, I mean, they're really good to go. They have your policy. So it's not like, I mean, some of us, maybe some of y'all have an insurance agent that contacts you and says, hey, guess what happened or guess what changes? 9 times out of 10, that doesn't happen because I haven't heard from my insurance agent, and I like my insurance agent. But make sure that you want to pick up the phone and you want to ask if you qualify for any type of discounts. Is there a bundle package that's more effective for you? And it's a phone call that actually can save you money and make sure you and your family are covered. I know this really doesn't tie with insurance, but review your cell phone plans, your cable plan. I mean, just what you want to make sure that if there is a dollar to be saved, you want to make sure that you're definitely on top of it. So, how many of us have some type of budget in place? And it might be via Excel, it might be an app, or you might even have it on paper. Your budget is your financial plan. And what I say is no plan, no progress. It's like having a destination and not using your GPS. And you don't know where you're going. So this holds true with your money. If you're trying to get your finances on track, a good first step is to know how you're spending your money. And as you can see in front of you, there are 3 steps to help you maximize every dollar that you earn. Find out where your money is going. Add up your monthly bills, such as your mortgage or your rent, insurance, utilities, phone. Then track your personal expenses, such as groceries, gas. Are you still going out shopping for clothes? Is anybody still going to Starbucks? One of the things I know during this COVID season, I used to go to the grocery store and it was a field trip because I didn't have anywhere else to go. There was no other place. I don't know why I felt comfortable and safe to go to the grocery store, Walmart, but those were my places. And I needed to get out of the house because I'm working at home and I'm a person who's in the field. And it was like, what am I going to do? So BJ's, the grocery store, Walmart, we were like this. And so, and I can honestly say we have increased as far as going out to eat. I don't know what happened, but cooking it's not happening as much. Well, we cook, but on the weekend, it's off the chain. But and let me move on because I can go on and on. Number 2, put your money where it matters most. Ensure you have money to cover your needs first, like paying your bills, pay down your debt, and add money to your savings. You got to prioritize needs versus wants. It's that simple. And again, it says review your needs. As you review your expenses, consider whether an expense is something you need or if it's something you want. And this step will help you to find areas to reduce your spending and find ways to save. If you find you don't have enough money to cover your spending and allow for savings each month, think about ways that you've got to reduce your spending on things you don't need. I know my husband is like, if I see another box or envelope come to the door from Amazon, because it's Christmas every week, we're gonna leave that alone because that doesn't sound like a good example. I do budget and save. I really, really do. But Amazon, y'all, it's just like so crazy. Can I tell y'all what I bought on Amazon? And I mean, it's crazy. We're getting our house together. And so we needed a shower head. So you go to Lowe's, you go to Home Depot, and these things at minimum, one shower head is like $90 and higher. Amazon, 2 for $89. And let me tell you, the water pressure is all that. So y'all have my email address. If you have any questions or concerns, I'll definitely share it with you. But I really wanted to share that. My husband hates when I do share stuff like that. But let me move forward because I really want everybody to benefit. If Tracy knows something that's beneficial, I am going to share. Let me move forward. So we can talk about budgeting, savings, tracking, but we all know to build our savings, some of us need to consolidate our debt, reduce our debt, or just pay it off. So you can have those additional funds. So why is it important to pay down high interest rate debt? 1, you can reduce your total debt faster and pay less on interest and fees by using a pay down strategy. And it's also helpful to make a list of your debt amounts and interest rates. You'll get the most financial reward by paying down your high interest rate debt first, such as your credit cards. And that's because the higher the interest rate, the more money you're charged as far as when it comes to borrowing fees. And then by targeting this debt and paying it off in full first, you'll reduce the total amount you owe faster. And then you also free up money to put towards savings or pay down your next debt. So use this approach to pay down accounts with the highest interest rate one by one while still making regular payments on the rest. And you've got to pay more than the minimum. So again, I have another transparency point. And again, what worked better for me when I came to paying down those number of credit cards that I shared with you a little bit earlier was paying the smallest one off first. It's a psychological thing, y'all. Um, I felt more accomplished because I paid it off. And I could say, dang, I did something. So paying that smaller debt off, it may not be the right one because it may not be the one that has the highest interest. But for me, I found that I felt better and I felt more accomplished because, and then once I paid that credit card off, I actually did put that money towards the next credit card. So again, that helps you to make sure that you pay off your credit card, your credit debt much sooner. And believe it or not, we are coming down the home stretch, ladies and gentlemen. I hope we have some gentlemen on. I saw our females on there, but hopefully we have some gentlemen on there. I can't see your names. But we've come back to credit and how important it is to stay on top of your credit. We all know that the value of having good credit, in many instances, it outweighs cash. So maintaining good credit is one of the best things you could do to keep financially healthy. And a strong credit history and a credit score may help you get better interest rates on loans, credit cards, and lines of credit. Plus, many insurance companies, cell phone providers, and landlords may refer to your credit score to make decisions. So, your credit activity or what you borrow when you repay it, that's what makes up your credit history. So, the credit reporting agencies collect this information from various sources and they issue the reports, your credit reports, based on your borrowing and debt paying habits. And all this information contributes to your credit score. And like I said, it's like a grade, it's like getting a report card. So the first tip on the slide says you should check your credit report annually to make sure that it's accurate. And as we all know, the number one white collar crime is identity theft. And so you want to make sure that there are no debts on that report that are not yours. And just a quick heads up, you can check your credit report at www.annualcreditreport.com. And I'm going to say that again, www.annualcreditreport.com. Because if they said through April 2022, Experian, TransUnion, and Equifax will offer all consumers free weekly credit reports through this website. And this is to help you protect your financial health during the situation as far as with COVID and all of that. And that is really huge, you all, because normally when you get your credit report, you could only pull it once a year for each credit reporting agency. So check it out. Check out your credit report. And I'm going to throw something else out here. This is Tracy talking. This is not Wells Fargo. I know some folks use Credit Karma. I actually went on something called Credit Sesame. And these are things you want to see if there are any derogatory items that are out there. And I actually found that I had a collections item from 2019. And I'm telling you, and a matter of fact, I just paid it off today. So my credit score is going to increase. I'm telling you all this because there are so many resources out there for you all to help yourself, to get yourself out of your circumstance and situation. So please make sure that you take advantage of them. And as we wrap up, because as I share with you all, this is a high level overview of what is more to come, where I go a little bit more in depth, whether it's talking about budgeting, savings, credit, savings for retirement, learning about estate planning, learning about becoming a first-time home buyer. So there's an arsenal of workshops that I have, but I wanted to make sure, I wet your whistle, let you know what was actually going on, and just touched on really hoping that there'd be an aha moment that you all would want to make sure that you would think about, what can I do to do better as far as my financial journey? So as I said, as we're going to wrap up and touch on saving for retirement. And I want to start with just a couple of statistics. So in 2019, the Fidelity report showed that an average employee would need around 80% of pre-retirement salary after leaving their job, meaning after they retire. So this means if you're earning $100,000 a year, a secure pension will need to be worth $80,000. And I mean, it makes sense. I mean, as soon as when you retire, that would be when you're actually, doing some more things, when you have that opportunity to travel. You're not really buying anything new, but you're trying to do various activities that you did not have the freedom to do when you were actually working. Another stat showed that nearly 44% of people in their 40s have already withdrawn money from their retirement account. Transparency. Again, two incomes to one, trying to figure out how to pay bills. I had to borrow money and I'm grateful, but I had to do something that I really didn't want to do. But I'm grateful that I was able to borrow against my 401k in order to help me to manage my debt. So, it's something that some folks have had to do. It's called survival. And it was actually a very low interest rate. So that means that money that I borrowed against obviously was not getting the rate of return as far as when it comes to investments, but I had to do what I had to do to make sure that the bills were paid on time. And then it said, another 41% of Americans ages between 50 and 59 have also done the same as far as having to borrow against their retirement. Again, Tracy's not suggesting this is something that you do. I'm just being transparent and sharing with you. It was something that I had to do. So why is it important to start saving for retirement early? When it comes to retirement planning, it's never too early to start saving. The more you invest and the earlier you start means your retirement savings will have that much more time and potential for it to grow. So by investing early and staying invested, you may be able to take advantage of some compounding interest opportunities. And again, the sooner you start saving for retirement, the less you'll actually need to put away because your money will actually be working harder for you because it will grow year after year. So to keep your retirement goals on target during peak earning years, you may also want to follow the other bullet points that are stated. Annually review your progress with your financial professional and adjust your savings and investment goals, and manage your asset allocations to stay aligned with your long-term goals even during periods of market uncertainty and volatility. So it says review with your financial professionals. Your banks have financial advisors, whether you're at a bank, whether you're at a credit union. My thing is, no question is a dumb question. You have to ask. We have not because we ask not. So if you don't understand something, if something doesn't make sense to you, you've got to ask. I mean, people in the bank, in the credit union, they're getting a check. They are there to service you. So make sure that you take that time out and have that conversation. Write your questions down. Bring your notebook in. No question is a dumb question. Consider putting part or all of any bonuses, tax refunds, or other lump payments into retirement savings. And this will help you to stay focused as far as maximizing on your retirement. And it doesn't allows you to not to have to contend with any other type of competing priorities like paying bills. Some of us might have children and you're paying for college. You've got to have a plan for each financial section or sector of your life, but it's got to be in order. So how can you get started? By getting started. I mean, and as you reflect on the 8 healthy habits that I went over, consider what actions you might take to get started on your journey to better financial health. So, and again, have a goal. Make sure the goal is manageable. Do not stress yourself out. Start somewhere versus not doing anything else at all. And if you have any questions or any concerns, you all have my email information and I will gladly have that conversation. I also will gladly be able to connect you to someone that might be able to help you. Or if you're interested, feel free to scan the QR code and you can set an appointment on your own if you want to have a conversation as far as when it comes to what's going on, as far as having a conversation. That doesn't mean, and this is with whatever bank that you're dealing with. Have a conversation. You don't have to be pressured to any type of products or services or anything like that. You just need to be able to take that first step. I want to thank you all so much for joining, for listening. And my hope is that there was something within this presentation that you could use on your financial journey. I do have links and resources feel free to send me an email and I will gladly send it out. And again, huge shout out to Joshia and Bree, the amazing coordinating team, ensuring any technical issues would not happen and gave me that funky house music, which is a way to start my evening off right. And and definitely last but not least, thank you, Tiffany, for allowing me to share with your Greater Baltimore Urban League team as far as some financially healthy habits through Wells Fargo. And the floor is all yours.
Thank you, Tracy, so much. You can, if you can see all my notes, I wrote down a ton of notes. So I was that my head was down because I was taking a lot of good notes. That's really helpful. For anyone that would like to refer back to the information, our wonderful Bree, who is just our everything, will repost this on our website. If you're interested, you can go on and look because we will definitely have Miss Tracy back, who did a phenomenal job. And the house music gave me life. Believe me, we had a long day. So we will always bring in our house music or any other music. And we do have happy hour. So feel free to bring your your glass of wine, your wine of glass. Obviously, someone had their glass already, but bring your glass, your dinner. We will continue these on. And in the future, we will be hosting dinner. So if you decide to join back in, we will be sending out Grubhub gift cards or DoorDash gift cards so that you can have a meal with us, an evening with us. And you have to bring your own alcohol, but we will provide small gift cards for Grubhub and DoorDash so that you can have a meal with us. So please feel free to join back in. We have many, many different webinars where we provide a wealth of information in regards to your finances, in regards to your small business, if you have one, just life tools. Please feel free to send us any emails for any questions. And also, please become a member. We really would like to grow our membership. Our membership is our GBLA, which is our Greater Baltimore Leadership Association, also known as our YPs, our young professionals who are booming. We actually have our former president, Mr. Jerome Alexander, who was a monster in it, and he doesn't know, but he'll be coming back in a couple of years. And hopefully he will join with our new president coming, who's also going to be an awesome blast. So really excited to have Mr. Jerome that joins us and provides his wonderful support to all of our programs. Currently, we have 4 pillars that we are serving, but due to COVID, we have definitely pivoted our services. We still provide college and career readiness programs for our youth under 18 or in college or in high school. I'm sorry. We have our entrepreneurship center, which is our Raymond B. Haysbert Center that provides one-to-one consulting, workshops, and webinars, very similar to this that Ms. Tracy has performed for us this evening, to support you with sustaining your business, especially during these COVID times, and definitely during these times where it has been more difficult, not difficult, I'll just be honest, it is continue to be common that Black businesses are not receiving the support that they deserve and need to sustain. So during this time, we have also provided small micro grants to our Black businesses. We have linked our businesses to our to access to capital, as well as supporting them in applying for PPP loans. Many people believe that because you were denied the first time, it's not for you. That's not true. So you still have about, I say 31 days, Tracy, to go ahead and apply for PPP. And if you're interested, please reach out to us because we are linking you with the experts that can assist you in getting PPP loans. We have started a returning citizens program due to COVID. We have many, many residents of Baltimore that unfortunately have been released early, which is great due to COVID. However, they're being released back to society without the support that they require. So we have began a returning citizens workforce development program to assist them in obtaining the skills training necessary so that we can build the pipeline and have them employed. And we are a step just a little above the rest. So our training is specifically to get you into careers that are middle class, bringing you to, the upper class as far as income. Entry level is fine, but we know that entry level does not sustain our households these days. So we're really looking to give you some training and support that will provide certifications in IT, construction, healthcare that will be able to sustain your home. And lastly, we are praying that we will definitely speak these things into existence, that we will receive this great partnership from Exelon and BGE for a workforce development program that is for anyone, the entire public who seeks to desire a career in utilities and construction. So I'm excited about that possibility that's coming. We provide support as far as food distribution. We will have a pop-up vaccine in the upcoming weeks. Our partnership with Giant, where we will provide the vaccine to those hard hit areas. So we won't have registration because we really want to be able to fill up those vaccines with individuals that just walk up and don't have access to, you know, what you have access to now, which is online registration and support. So just wanted to say thank you. Please come back. We will have many more different webinars just to provide some education and support to you all so that we can empower our Black brothers and sisters in navigating this world. So thanks again so much, Ms. Tracy, and we can't wait to have you back again.